The second question is, how do you make money right now? Or how do I make money right now? Well, you would be pleased to know that this time might be different. Is not true. Every time is most likely the same. Now, if you are a 9 to 5 employee with a job and you have a bi-weekly payroll deduction at the bank or with your financial advisor, my advice to you is increase that bi-weekly pre-authorized purchase plan and buy the entire index and wait for a rebound. So today is Friday, and if you walk into the bank tomorrow, Saturday, or even Sunday, and ask the bank employee to increase your bi-weekly RRSP contribution, or it could be to your TFSA account, most likely the paperwork would need a couple of business days to process. And by the time your next payroll deduction happens, if the market falls, then congratulations, you're buying some cheap shares. If the market goes up, then it's good. We're on the road of recovery. But you won't be hurt too much because it's just a small bi-weekly pre-authorized purchase plan. But I am asking you to double the amount. Put in extra money if you can every 2 weeks into your long-term retirement, investment, savings accounts. Okay? Buy the entire index and wait for a rebound. If you are an adventurous investor or you have your discount brokerage trading account, then take note that portfolio managers and stock analysts have what they refer to as the traditional playbook. Just like American football or any sports games, if this happens, then the team responds by this particular play. That's called the playbook. And portfolio managers and stock analysts, they like to buy stocks that are widely held by institutional investors and pension funds. And these are the stocks that are most likely to recover the most. And there's 10 of them, and they're all NASDAQ technology stocks. Let me tell you those 10 stocks first and then explain to you why they're all NASDAQ technology stocks. The first one is Apple, AAPL. Second one is Amazon, AMZN. Third one is Alibaba, BABA. The fourth one is Baidu, BIDU. The fifth one is Facebook, FB. The sixth one is Alphabet or Google. There are two symbols, GOOG and GOOGL, both are fine. The seventh one is Netflix, NFLX. The eighth one is NVIDIA, NVDA. The ninth one is Tesla, TSLA. And the 10th one is Twitter, TWTR. Now, they're all NASDAQ technology stocks because the price valuations and the projections are easiest to exaggerate by stock analysts. Let's say an analyst comes out and upgrades all these 10 stocks. You are most likely to buy because you believe the reports. And that's the whole point, because the valuations and projections are easy to exaggerate because these 10 stocks are widely held by institutional investors and pension funds. These are the 10 stocks that I believe shall be in play when the market recovers, which by definition means that portfolio managers decide that they would, well, I can't really say group together and buy because it's hard to prove collusion. But once one fund manager sees a particular stock with high volume and the price going up, they probably can smell what's going on and they might jump onto the bandwagon and buy. And that's what I want you to also be aware of. Now, if you don't believe my analysis that NASDAQ technology stocks, the price valuations and projections can easily be exaggerated, think back 20 years ago to the dot-com bubble, Y2K, where technology stocks, dot-com stocks first came out with zero earnings, negative earnings, tremendous rate of cash burn. No one believes, according to traditional, generally accepted accounting principles, GAAP, that these companies would ever be in profit. But people still bought and the prices went up. Many of those companies went bankrupt, but many of those survived today, and you might still recognize those names. And that's the reason why I believe those 10 stocks most likely will recover the most. There's also the most speculative highest risk play that just happened this week. In fact, today, Friday, March the 6th, 2020, you and I both heard that during the OPEC, Organization of the Petroleum Exporting Countries meeting in Vienna, Austria, Russia did not agree with the production cuts that OPEC proposed. Therefore, crude oil prices fell. Hi Ben, how are you? You are on camera. The current crude oil prices for the April 2020 futures contract, I checked about an hour ago, is $41.57 US. That's per barrel, US dollars per barrel of crude oil. Thank you. Now, I believe Russia is playing a very dangerous game of brinkmanship. And here's the gamble. And again, I repeat, this is the highest risk speculative play. The next meeting is scheduled for June the 9th and June the 10th, 2020. The last meetings, they just ended March the 5th and today, March the 6th. But if in the next OPEC and non-OPEC ministerial meetings on June the 10th, that would be too long. Russia agrees, then, well, it's 3 months away. There's no play. What I am saying is perhaps there's a chance that next week, if the market rallies, or if Russia suddenly agrees with the production cuts, or there's news that there is agreement amongst the OPEC countries and non-OPEC members like Russia on production cuts, then the supply side equation, there would be less supply, or hopefully there would be projected decrease in supply of crude oil that would drive up crude oil prices temporarily just for a speculative trade. The coronavirus, the US-China trade war, the current supply chain disruptions that you and I are seeing worldwide still is expected to cause the demand side of crude oil to continue to fall. So the general consensus is crude oil prices shall continue to fall, maybe to the $30 or $20 level. But this one particular thing that's happening with Russia specifically might have a chance to cause the crude oil prices to spike up. And that's the only reason why it would, and that's the speculative play. So to repeat, the first recommendation is increase your biweekly pre-authorized contribution plan. Second recommendation is to buy the entire index and wait for a rebound. The third recommendation is to buy those 10 most widely held NASDAQ technology stocks. And the fourth recommendation, which is also the most speculative, is a play on crude oil futures because of the Russia effect. So the time now is 9:57 p.m. Hello, Alec. We are about to start our Cantonese radio show. So I'll see you next week.